Welcome back to the Building Equity Podcast. I'm James Schlimmer, CEO of Equity Real Estate Services. With me as always, Mr. John Bowens. How are you?
I am awesome, James. Happy to be back here again and happy to have a guest on with us today.
We got a
One
guest.
of our real estate pros.
Look at our show. We've got guests. And what kind of guests do we have? Is this some amateur?
This is not. So not only is Dustin an appraiser, a licensed appraiser, but he's also an active real estate investor. So I'm sure we'll get a little bit into that. But I think what we have in store for viewers today is all about property appraisals, what to look for. As you like to say, James, the ghosts and goblins that are lurking in the shadows on properties and how to avoid those pitfalls.
So if you're brand new to the Building Equity Podcast, kind of what John and I are trying to do here is we're trying to create a show, and Dustin, so you know, we're creating a show for entry-level, intermediate-level real estate investors, but we kind of feel like the market is saturated with become a billionaire overnight. You know, go fly on corporate jets and do all this stuff. Whereas we can bring our years of experience, John is a real estate investor, me as in title insurance, to be able to say, no, this is the granular things that you can do to be able to avoid traps that could cost you thousands of dollars. And those traps could be paying unnecessary taxes, which we've talked about on previous episodes, which is how to buy and sell real estate with your IRA, or inheriting a property that has clouds on title. I know you're talking about you do mobile home investings and you got to do quiet title actions.
Sure.
This is the granular stuff that we don't really think exists when it comes to real estate investing, that we want to create a show about that. And one of the number one questions that inevitably comes up that's a challenge for folks is, how do I know if I'm buying at the right price? And how do I know if I'm selling at the right price? So it's property valuations. But before we go into that, like always, John Bowens keeps us honest. We have our segments. We've got real estate news you could care about, or you should care about, and that's brought to you by IRA Title Pro.
What's IRA Title Pro?
I'm going to tell you exactly what IRA Title Pro is. Are you buying or selling real estate using your IRA? I know you do that, John.
I do, a lot of it.
On your next real estate investment transaction, try closing with IRA Title Pro. You're going to enjoy a full-service title company that focuses exclusively on IRA transactions, which is a big thing. Close faster, on average 11 days faster. And you're going to be able to have an experienced close team that will also understand fractional IRA interest, which we never went into on the previous episode. So we could do a whole episode on that.
So not every title company understands investors, is what you're saying.
Not every title company understands when an IRA owns the property. So take it from me, like my team, if something is challenging or a little bit tricky, typically those files go to the bottom of the files, bottom of the pile, and that's where delays come in. Right? So, in addition to that, awesome proactive communication and competitive closing fees. So if folks want to know more, they can visit iratitlepro.com. And with that, let's take a look here at our news that I find interesting because we do have a Florida licensed appraiser on. This is from the Mortgage Professional Association. A couple episodes ago, Dustin, we talked about the news was the inflation, 7.5%.
Sure.
So the Fed, there's a couple tricks that they can pull. There's one big one is they're going to raise interest rates. And what they're talking about here is this appraiser, by the way, let's really cite this article the correct way. The article, this is Tony Cantu. It's going to be an interesting year. And appraisal expert John Tallinger, who's the chief growth officer at Class Valuation, essentially is what he's saying is that the refi game is going to stop because interest rates are going to go up. And if interest rates go up, modern economics says property values are going to go down. And I love the fact that we have this news article here, and we're literally sitting with an expert in real property values in the state of Florida. So let's dive right in, Dustin. And can you give everybody a little bit of background appraising in Florida?
Sure. Dustin, David, thanks for having me on your show.
You're welcome.
Been a certified property appraiser for almost 3 years now. Been in licensed real estate broker since 2005. So I've been active in the real estate business since 2004 on the west coast of Florida. Native Floridian, born in Naples.
Huge tennis player.
Yeah.
I know. So
Yeah, sure.
what some of our listeners may not know is Dustin and I, we've met each other in the 6th grade. You know, here we are 40, right? So we were 11 years old or whatnot. So Dustin has always been on the cutting edge of real estate. And he says broker since 2005, 2003 when you were living over in Lely. You were way ahead of the curve when we were.
Well, I shouldn't say but yeah. we were buying and selling a property in Punta Gorda,
Yes.
vacant lots, before Zillow and the internet was a real thing.
Before Facebook almost.
Correct.
Yeah. So now you've kind of transitioned into the property appraising gig, which is obviously on fire, where you can't
We've been
find
busy.
enough appraisers.
That's right. We've
Right.
been busy.
So the question that comes in with real estate investors is, well, how do I value a property the right way? And if we were to use an example, and I'm sure you have certain examples, but let's just say it's a tax deed sale, and somebody's scrolling through on the clerk of court's website, and they're like, cool, here's 123 Main Street. What advice could you give to someone to say, hey, am I going to buy this? It's going up for auction in 10 days.
Sure.
What can I do today sitting at my computer to be able to figure out appropriate value?
Well, I'd say first it's the right approach in knowing what your entry point is going to be, because a lot of people think the money is earned on the sale. The money's actually earned on the negotiations and how cheap you can buy a property.
Okay.
So in terms of valuing that property, I think the first step I take is going to the county tax records, which is the local county's appraiser website, and educate yourself on that property, on the taxable value of the land, and also the improvements, if any, that are associated to the property.
Okay. Now, usually though, I mean, the taxable value or the assessed value of the property is below market value.
Well below. It's a starting point.
Okay.
It gives you a property card of the core components of what is associated to that property.
Okay.
So I think that's a good starting point.
So it gives you a baseline.
Correct.
Okay.
Correct. I typically then create a grid for each property that I'm interested in.
Yeah.
And the core components of that property are year built, size, which would be the gross living area of the home. Gross living area would, I guess some call it air conditioned space.
Sure, living space.
Living space.
Yeah.
Year built, size of home, view, bedroom, bathroom count. So basically get an idea of what you're looking at.
Okay. So if you're looking at, and we can get granular here, like just pick a property, but if you're going to the property appraiser site, you can see, let's just say for instance, that the assessed value of the home was $100,000 for easy math. Now what you're doing is saying, okay, what's the year this thing is built? And what's the difference whether it was 91 or 2008?
Exactly. But
What's the difference?
Well, difference could be a lot of things. I mean, the older one could be worth a lot more depending on the condition of the home.
Okay.
And I think it's important, too, to mention that we're talking Florida right now.
Yep.
We don't know appraiser county tax records and their accessibility in other states.
Sure.
At least I don't.
Well, there's 3,700 different tax collectors throughout the country, so everybody's going to be different. But for the most part, there's an assessed value. That is, what you're saying is a great baseline,
Right.
right?
So that gives you an idea of what you're looking at, what the home is. Then the next step would be looking at comparable sales, because now you know what you have.
Okay.
I also say that there probably isn't a replacement for a local expert within the market. So that would be either a local real estate agent or a local property appraiser that could help you with this process.
Okay.
I think actually, not to go off on a tangent, but I think that's what Zillow ran into with their iBuyer program, was when they were buying homes, they were buying from a standpoint.
Their algorithm was flawed.
Yeah, their algorithm and their broad stance on the market, when in reality, real estate is local. And you need boots on the ground locally to know what you're doing. So, so a local real estate agent, local appraiser would be helpful.
Sure.
If time is of the essence and you have an auction coming up in a week, then you need to get moving. And there's Zillow, there's Realtor.com, there's various outlets where now you have the components. You can create a search criteria and parameter, and then look at recent sales within that market. I would not so much look at active listings or even pending, because they're not technically closed. I would look at actual sales that have been closed.
So that's tax deed sales. Now, let's say a parallel to your question, James, for Dustin, because I'd love to get your ideas on this, is obviously we can look at the MLS, but like we've been talking about in some of our other episodes, inventory is tight right now. And so as an investor, a lot of people are going to off-market deals.
Yep.
Whether they're running an absentee owner marketing campaign and they're bird dogging for properties that way, or maybe they have some other type of marketing system that they have set up where they're looking for maybe probate properties or other off-market transactions. So if I'm an investor that's looking at a, let's call it off-market deal, what do I need to understand? And think these are, maybe some folks that are a little bit newer to real estate. Maybe they've bought some properties, but maybe they've never done an off-market deal. In that particular context, whether it's a buy and hold or a fix and flip type opportunity, what should I be looking at as an investor to determine how do I structure my offer? How do I make sure that I'm valuing the property properly and I'm going to present the seller with the right offer?
And it's an investment property. This isn't something that you're living in.
Correct.
Absolutely, investment property.
Okay. All right. So you have to have your entry point, and you have to have an exit for yourself. And in between there, you need to know what your costs are going to be, your input costs for what we call the value add. So what are you bringing to the property to upgrade it? So that would be your remodeling expense.
Yep.
And there's sort of like that fund for unforeseen expenses that
The water heater explodes.
Yeah, and you weren't aware of that prior to, and it just always seems to happen every single time. So you need to have your entry point, your exit point. How you get that is just general knowledge of the market, and having a realtor run a comparative market analysis for you on what are the as-is values. As-is meaning they have not been touched. These homes are not necessarily in poor condition, but maybe they just haven't been rehabbed. And then what is the remodeled price of a home that's been completely redone?
So on a previous episode, John, you talked about it too. It's like, hey, so if you're brand new, you literally just woke up today and say, I want to start real estate investing. To me, this is where it makes sense to be part of those groups you mentioned in previous episodes, to be able to take that person out to lunch that could mentor you and say, hey man, I think I got my first deal.
Yeah. Agreed.
Right? And am I in line here? So it's kind of seeking that knowledge for the first couple deals.
Sure.
Because it's going to be hard to navigate on your own, right?
And I'll touch on that for a minute for those that didn't listen to that episode. The real estate investor groups, which are all across the country, just do an internet search. Dustin, I'm sure you've been a part of them or you're familiar with this. In fact, I've met licensed appraisers through these groups. Usually when you go to one of these real estate investor meetup groups, just do a Google search online for real estate investment group in your area, and you'll find a group of like-minded investors that have gone through the same struggle that you might be going through or going to go through, and they can help you with this. A couple things I did want to tease out, James,
Please.
And Dustin, jump in here. So Dustin mentioned, for all of our viewers, he mentioned one of the first things is maybe go to a licensed real estate agent or broker and get a CMA, which for those of you who aren't familiar, that is a certified market analysis. Dustin, maybe if we could tease that out a little bit for our viewers, what does a CMA, what would that actually enable an investor to do in order to then structure their offer to that for sale by owner type situation? Sure.
The comparative market analysis basically provides you a list of homes based on a search criteria that particular agent has put into MLS, and it's created this hot sheet of homes that match that criteria.
Yep.
And there should be a kind of a baseline of a price that you see amongst those homes. And that baseline kind of should give you a range of where your offer should be.
And really, but you're looking at those four things that you talked about. Kind of year built would be a comparable property.
Yep.
Size. Mm-hmm. So if you're a couple hundred square feet off, is that a big deal? Or
I'd say the deviation should be no more than 20%.
Great
of
point.
The gross living area. So
that's a really substantive.
Yeah. So for 1,000 square feet, easy math, that's 800 to 1,200 square feet.
Okay. Mm-hmm. Would fall into the same game.
Correct. Well, yeah. It gives you anything outside of that, it becomes less of a
comparable
substitute property.
Yep. View.
And what the certified market analysis does is it allows us to determine what the after repair value is. You'll hear a lot of real estate investors say ARV. So that's really what the CMA does. It tells us what our after repair value is. And as you mentioned before, Dustin, we're talking about the value add, which gets us to the ARV, which then, so we're just reverse engineering the deal, right? And then that will get us to what our appropriate offer is going to be, because we're assuming that these are properties that they're going to need rehab, right? And in some cases, they're going to need more than just paint and carpet, right? Especially in today's market.
Sure.
You know, in order to get the margins that you would need as an investor, you have to look at for these off-market deals that are going to require maybe a little bit more rehab than the light rehab.
The worse, the better.
The worse, the better.
And it's the value add that you bring to the table as an investor that's going to make the difference.
What are you seeing in today's market, Dustin, in terms of, I mentioned, the light rehabs. Like I always say, it's very competitive in terms of, finding the deals that just require the light rehab.
Yep.
It's the deals that nobody else wants.
The bigger the rehab, the bigger the problem, the better.
Typically.
What about structural issues?
Yeah, well, that's important. I mean, there's lots of pitfalls to watch out for. Whether, it'd be nice if you had a seller's disclosure from the seller of the home that you're buying.
Yep.
If you are getting a loan, you'll probably have an appraisal done. Whether it's hard money or a bank, if you're paying cash, you can still, get your own inspection and appraisal
So what would
done.
you consider a decrease in the property value?
Like a deal breaker?
Yeah,
Or
not a deal breaker. I'm wondering, it's like you're looking and you're like, hey man, there's structural issues on this house. I know I can get them fixed because I work with an engineer and this person, but I want to be able to knock X off my offer because I have to make up for it. Like, where is there a range that you would?
It's subjective because every investor has different strengths and weaknesses.
Okay.
So if you're comfortable working on a home within a flood zone, then you might be more comfortable than someone that doesn't want to deal with that. Or there's certain trees that are protected in the city of Tampa. It depends on what you're comfortable with as an investor. Myself, I research flood zones. I research problems within the chain of title. And if there's debt there associated to it, that all has to be built into my offer.
How long has it taken you to come up with is it a 3-day process? Is it a...
That's really the fun part, because as you get into the chain of title, there's a whole story behind the property of the previous owners and what they went through, and you start reading these publications that are all public record.
Yep.
And it starts coming to life for you. The process, how long does it take? It could take an hour, could take a couple of days, depending if maybe you need to find a satisfaction of a lien at the clerk of court on a demolition lien that was $10,000 or something.
So, well, let me ask this. Did you have anything, because I knew you were talking about reverse engineering the offer, but did you have anything else on that you wanted to hit him with before I go?
So I think we covered that, right? Which is, you get an idea, viewers are getting an idea of, the importance of working with professionals, i.e. real estate broker, possibly an appraiser, even before you make an offer on a property.
Right.
Certainly you want to get an inspection. Now that's going to happen after your offer is made, but you still have the ability, with having a stable of professionals like Dustin, like other people and licensed, people that can inspect the property. You can consult with these individuals ahead of time, build your offer, make your offer, right? Then you get an inspection. If you need to go back and renegotiate, then you go back and renegotiate. So I think that covers what we want to cover in this show. So with that, James, I'd say jump right into the questions that I know we have from a lot of our viewers.
I also love the fact too, you said you make your money on the deal, on the buy, not the sell.
Always on the buy.
Always on the buy, right? So
stick to your number. If you don't get it, you can walk away.
And there's always a deal, right?
There's always a deal.
There's always a deal that's out there, even though the market's on fire right now. But so let's say you're a seller, you're doing for sale by owner. Where do you see the most sellers go wrong, or the number one complaint sellers will have when they say is that they value the property wrong?
Sure.
Right? So what do you think they do? What mistake are they making?
Not to upset too many homeowners, but probably the biggest thing that a homeowner should do is take the emotion out of the sale, because every homeowner tends to feel as though their home is the best in the neighborhood, when it really comes down to the core components of that home. And they may very well have the nicest home on the market. That's where I see the most FSBOs go wrong. Where I see a for sale by owner, I think, oh wow, that's a great opportunity, and then I see the price,
And it's usually through the roof.
and it's out of bounds completely. So I'd say that's the first.
And you follow
Step.
the same principles. So for instance, let's say I am a for sale by owner, or I'm an investor that's going to be selling. I know that I want to flip this property, right? So if I'm going to come over here, Dee, I want you to walk me through as I'm up here, and I'm just going to pick a property,
Sure.
wherever. And you're going to, like, first plot, go to Zillow? Is that what we're thinking?
After you see what your home has or the appraiser's website.
Well, I'm selling the home, right? So I know what I have in it. And let's just say...
You know the home. You know
and I
what's,
know
okay.
the home, and I know, hey, everything is
Yeah.
good, but I haven't updated my roof.
Sure.
Roof's 20 years old, right? And where else am I going to go just to get that baseline?
Zillow's a good start.
Okay, so
Yeah.
you'd say, hey, we're going to go to Zillow, so let's do it. I wanted to be able to say, we take one here. And then look up your property?
Sure.
Like look up your own property or look up...
Yeah, sure. Look up.
No, you don't have to give me your property. I'm just saying I'm the seller here, we can come over and do this. We'll get a bunch of Looney Tunes. All our viewers will come to my house. All right, so you get the house here and it's sold, and here's my Zillow. Tell me what to do, bud.
So there's your Zestimate. Yeah.
It's insane.
Yeah. The number or the
appreciation in a
algorithm
year and a half.
the
It's got to
algorithm
be
behind it.
Yeah, it just doesn't seem factual, but
Yeah. So within that area, this portal here, you should be able to.
it was right there. So look at. Come up here.
Yep. Sold. And now you want to go to bed and bath, and then start looking. Roughly, no, don't do exact match because you don't want to pigeonhole yourself. Leave price out. Yep, single family home. Go to more. So now this is where you can kind of dial it in. So you definitely want to look at a same lot size. Not same, but within, you're not going to pull up an acre property for a quarter acre.
So if, for instance, like your 1.14 acres, just go like 1 acre, right? What's the...
Right, I would go up, so if you're on 1.1, I would go up to 3.
Up to 3 acres?
Or, okay, 5's fine. Yeah, start at 2. That's fine, and see what we get back.
All right, cool. Year built?
Year built, so when is the home built?
I want to say it was 91. So we'll do minimum 91.
So you want to go 1980 at minimum.
So here, this is
And
the
then,
stuff. This is good.
You want to go 2000, just roughly 2010. It's not going to have a basement. Must have AC, is it a pool home?
It's not a pool.
Okay, then leave that off.
Cool.
Sold in the last, go down, what is this, any? I would go last 6 months. I'll tell you this, in this market, you want to use the most recent sales. And
Very logical.
But if you do 30 to 60 days, you may not get enough of...
The temperature of what's happening right now.
Yeah, you may not get enough of a batch. So you want to go, same thing with the year built, that was extremely subjective. I would open that up even more at first and then dial it in. If there's a ton of comps, then you can dial in a little bit closer. What you want to avoid on a 1991 home, obviously, is new construction, because I think there's some new homes being built in the area that you might want to, that you'd want to avoid.
All right, so let's take a look here.
Did we put in a gross living area?
Uh,
Because I'm seeing a $900,000 home. Yeah, no, we didn't. Square feet.
so we could do up to, I think it's like 1356, so say up to 1500.
What's the size zone? 1356.
Yep.
Go 1750, and then on the minimum, 1,000. Let's see. Yeah, there you go. Done. Okay, so you immediately knocked out a $900,000 home. So, okay. So you start to see already 358, 415, 458, 380. You have a 600K. Click on that. That might be one we
Sold for 600 in November of this year on Green Boulevard.
So the algorithms are probably picking up this house to give the estimate on the house you looked at, right?
To get that to get my property up to that 536 or something?
Correct.
You would think, right?
So yeah, so let's look at a couple pictures on that. Okay, so it's obviously been updated.
It's been updated, yep. You got new floors. And what are you looking for, so specifically in this
Just
shot? 'Cause
very-
kitchens and bathrooms,
Just
right?
very broad, very broad overview. The recessed lighting, the hood coming down on the kitchen. I mean, the stainless steel appliance. I mean, the home has been updated, even if some of those pictures have been virtually staged or anything like that. And then I scroll through pretty quick and see if there is a pool. Then I know that there'll likely be an adjustment for that.
What are you putting in on evaluation for the pool?
There you go. It's based on the market reaction. So you see pool homes, let's say this is 630?
Yeah.
So then if you're at 576, 630, then you see there the difference.
Okay.
And this is also a little bit larger of a home too. So you're right in there, you're thinking 676, 576, there's
60 grand worth of,
exactly, but it's a little bit bigger, so you're probably in that 50K range.
okay.
And keep in mind too, for the investors, these adjustments are based on a depreciated improvement. This is not based on a brand new pool. So based the value that we're giving it.
It makes perfect sense.
So you can look, so get out of that for a second,
Yep.
and then click on that 350 there. I'd like to see that one. So that's a bigger home. Price was cut 25,000. Looks like a new roof. Just scroll down. Don't even click on them.
Oh, the house is rehabbed.
Well, looks like it's rehabbed.
So wait a minute here. This was listed for, are we on the right house? 599?
So it must have been a flip. They
Yeah.
bought that. They bought it at 350. Now you start to see the story.
Yeah.
Now you go into the county appraiser. You see, oh, he bought it for 350,
And they put-
and that's the most recent. He or she has already rehabbed it, and now they've listed it.
And he's cut the price by 25K.
Yeah.
So
Overshot.
he was at 6.25 and didn't get it. When did he get this puppy listed?
You can look and see what he bought it for too.
Yeah, we can. We can look it right up here and be like, wait a second here. Well, it had to be 350, right? Because we just looked at closed sales.
You would think if
Right.
that was yeah.
But we could always come over here and just get a peek real quick. This is literally the job.
Yeah.
This is it.
This is it.
This is, nobody does the nitty
This is
gritty
it.
of what to do.
This is your due diligence.
And let's come over here. Side
Yes. There you go.
Is it Southwest?
I didn't catch it.
Me neither. Let's do this. It is Southwest. 4180. Really? Here we go.
Fifth Avenue.
There we go. This is the fun stuff right here. So he got it in September for 350.
Okay.
And just so happens it shows up here, whatever your, typically there's a consideration on there. So you can see it if your property appraiser site doesn't have it. So he definitely got it for 350 and they owned it in 2018 and sold. I always like to know the story on why did these people unload it for that. Because that was,
I don't.
market was up.
And I tell you, I don't go too deep because then I don't know. I become.
you psych yourself out or
I
something?
I get so engulfed into it. I just keep it to what I need.
All right. Good lesson to learn there.
So this is a pro rehabber, right?
This, I mean, it looks like they did really good work in there. They didn't take professional photos, though.
I'm surprised they didn't stage it either. But then again, you don't always, in the market we're in right now, you don't always need to do that.
And it was an individual that, I'm not going to say the name because of the show, but I did notice on the property appraiser site, it was an individual.
It wasn't an
not
LLC?
Nope.
Well, we have an episode coming up about that. Why you rehab in an LLC or entity for liability purposes.
Think about that.
We'll talk about that.
This is what you're going to get on the Building Equity Podcast, Dustin. All right. So we see here a couple things that we learned, right? He overshot. I want to know when he posted this thing. That's not on here. Because I thought
Should have how many
it
days?
should. How many days it's been on Zillow, right?
Let me scroll down
Here
a
we
bit.
go. It's over here. Nope. I thought Zillow facts and features.
Put all that money in it, but they didn't do landscaping. I'm a little surprised by that, but still looks like a good job inside.
Price and tax. Here we go. There's the change on the 7th. He's got it listed with an agent. Here's the price change on one. He listed it for sale on January 14th.
They just bought it in September. I mean, it was a pretty aggressive turnaround.
Yeah. It's interesting, though.
You know, one nice thing to do if for an investor too is where it says contact the agent and make sure it's the listing agent that's listed the property. Call them and be honest. Call them and say, hey, I'm a local investor. I'm looking at a property in the area of a home that you have listed, and I wanted to see what type of response you've had on your listing, and you'd be amazed at the honesty and what they tell you and what you can learn from that in the local market. Oh, Dustin, I've gotten a bunch of phone calls, but I think we're still a little bit high, or everyone wants a pool, or.
I mean, I think it's fantastic that we were just able to look. You know, we have our comparable property that we're trying to unload ourselves. We have no baseline. We're not working with any professional. You can go online. You could be able to see, okay, I know if I was to list my property for 6.25, I'm probably not going to get it. Chances are, right? And I know that a completely remodeled property with brand new kitchen is going for $599, and for the last couple weeks it's been there. So it's giving you some metric.
That's
and
right.
If I need to unload this property quickly for whatever reason, you're not going to do that. But also on the flip side, if I was to go buy right now, right, you know, the high side, you're clearly not going to go pay 6.25.
That's right.
Which is a terrible deal.
Gives you an idea. Gives you a metric.
It's so interesting right now too, because the space is changing so fast. And then how do you, if you do you, when you're actually out there appraising, is there anything about what you expect to happen in the future to a property, or everything is the past? So
It's as of the effective date of the appraisal. So that effective date is the day of the inspection.
Okay.
So we can't be responsible for what happens to the property afterwards.
Gotcha. And how do you account for, I'm going to say, a kitchen upgrade? Let's say you're looking at two properties. X, your comparable, has got a brand new kitchen just like that one there, but this is a remodel one. So you're saying 20K, 25K, 50K?
Sure. There should be, when you have your batch of homes, your comparables, and you load 10 to 20 to 30 comparables in your grid, and you start looking at homes with a remodeled kitchen, homes without a remodeled kitchen, there should start to be a trend in that batch of homes, in that grid.
Yep.
So you could start to deduce, they call it a sensitivity analysis.
Okay.
So as you have an upgraded kitchen and you see the dollar amount of that difference, take in consideration there's other adjustments that are made too. View, lot size, 2-car garage, 3-car garage, pool, no pool. But hopefully you can deduce what the upgrade is for that kitchen.
Okay, so let's talk a little bit about those patterns, because
Yep.
I think that's important. I can say up in Cleveland, Ohio, what we're starting to see is a lot of homes that were originally 4-bedroom, 2-bath. Rehabbers are actually rehabbing those 4-2s into 3-2s, and they're taking that 4th bedroom and they're converting it into a very nicely done home office.
Everybody wants to work from
And
home.
so, exactly. So that's what people are looking for. So I'm very interested to tease this out for our viewers. Is there anything in today's market, and I know you're here in Florida, but I'm sure that there are some national trends. Is there anything that you're seeing within those patterns that are, to your point before, you were talking about the value add. So I think that's the competitive advantage that rehabbers or new-time investors can look at. Is like, hey, what is nobody else really doing? Or maybe there's just a few people that are doing this. What are the trends that we can take advantage of and differentiate ourselves? Are there any specific patterns beyond what you just said that you're starting to see in the marketplace?
It's a very competitive market, so the most I can see and tell is be willing to walk away from a deal because there'll be another one. The trend is is robust and upward, but you have to be careful.
So if you were, I feel like I know where you were going with this question, so I want to kind of put you on the spot.
Rephrase it.
Right? If you were appraising a property and it's February of 2022 and the trends are all going towards that a high percentage of workers are not going back to the office. And to take that 4-bedroom, I'm an investor and I buy it at a deal at a tax deed sale. And I say, you know what? I'm going to take that 4th bedroom and I'm going to make it an office. I'm going to outfit it as an office. Could that or would that affect your property valuation?
No.
Not at all.
No. No.
There you have it.
So a 4-bedroom changed to a 3-bedroom, or vice versa.
It's still a bedroom, right?
Yeah, it's still a bedroom. Still, the gross living area hasn't changed. The bathroom count hasn't changed. You've just basically converted an existing area into you've repurposed it for something else.
Was that where you were going?
Yeah, and so from a bank perspective, it doesn't make a difference, right? Because when it comes down to it, right?
Sure.
That's what's going to drive how much a bank is willing to lend on a property.
I mean,
Which-
maybe from a rental income standpoint, that could change it. Because now you can work from home and maybe you add on, I don't know, $50 a month because of that or something along those lines.
Yeah, a family might be looking for a 4-bedroom, so if they were to buy it, they just have the intention going in of converting it back to a 4th bed if they need that 4th bedroom.
Right.
Well, do you have any other questions for Dustin while we got him here?
I may, but do you have any last minute questions?
I'm thinking that I know we're running long on time, so I'm thinking like, hey, we try to wrap this puppy up, and whether or not we take this part out, it can go either way. But if you have more stuff for him, great. If not, I feel like we've gotten at least a baseline for somebody that's entry level to say, hey, and I'm gonna recap it. Head to your property appraiser site, get a baseline taxable assessed value. You know that's going to be low. That's below market value, right? And then take a look at the year built, take a look at the size, take a look at the view, which I find very interesting, by the way. Can you talk a little bit about the view? Why is that important?
Well, you go into these planned developments, which typically the majority of us live in. You have homes that are back-to-back homes with a fence in between, or you have homes facing the water, the lake, or facing the woods. And people prefer different views in different locations, but typically, for the most part, water or some type of private conservation view is a premium over a back-to-back.
Okay.
So you want to take that in consideration when you're looking at your home.
Could you quantify that premium? Is there a percentage like that property will be?
You will once you look up the other homes that have sold in your community.
That have a waterfront view?
Correct.
Got it.
The historical data and patterns that have taken place in recent months.
Then you're looking at the number of bath, bedroom, and then first thing, your recommendation is use an expert if you're the first time doing this.
Exactly.
John will say, hey, be part of the local real estate investing groups where you can reach out and say, hey, to whoever it may be, that older, wiser you who says, you know what, I just sold XY property on the other side of town, very similar, this is where I was at, and that will give you a benchmark.
That's right. Don't be shy to ask for help, and try to partner with an expert, and maybe you can provide them something in return.
Sure.
And they're an expert local real estate appraiser or agent.
Got anything else for Dustin?
I don't have anything else for Dustin other than, thanks for being on the show and be one of our pros. We'll have many other on the Building Equity Show. And I'm sure we'll have other episodes where we'll ask you to come back and enlighten us on what the current trends are.
One more thing on the article that you had up,
Sure.
From class value, and not to discredit another fellow appraiser, but as interest rates now will supposedly begin to go up, keep in mind in 04 to 07, the Federal Reserve raised interest rates 16 times. And we had one of the biggest bull markets in real estate despite interest rate hikes during that 3 to 4 year period.
That's interesting.
This is why we have experts on the
So
show.
that's a statistic. That's not.
Yeah, that's fact.
So could you argue that today the market is a little bit more fragile or sensitive to interest rate hikes? Possibly, but I think with supply shortages of material, I think we have more robust real estate market ahead of us.
The overwhelming amount of demand could
Correct.
absolutely
Correct.
keep those property values high
Correct.
and offset any interest rate increase.
I mean, look at 2020, the year of COVID.
Yep.
We paid 20, 30 million people to stay home due to work,
Sure.
whatever the case may be. The real estate market had a fantastic year in appreciation in 2020.
It was unbelievable.
So just like you said, supply, demand. We underbuilt. We did not invest in home building from 2010 to 2020, and now we are catching up. That is subsequently putting pressure on the resale market, and home builders cannot keep up.
So here's an interesting fact, and we're going to do a whole show on the build for rent space, but they say there's between 44 and 40 million rental properties throughout the United States, right? The turnover on those, about 12 million properties every year will be relisted, right?
Oh, the continuity, the turn.
Yeah, they turn over, people
moving
move out and
Gotcha.
so forth. But of those 40 million, let's just say, right, God, I lost my train of thought on there.
Sorry.
That's terrible on here.
So 10 million, 40 million.
40 million.
built?
The market, pardon my, is underserved by 7 million homes.
Yeah.
7 million homes, meaning there are more renters out there than homes that exist.
Yeah.
And there's 40 million, and there's the need for 7 million homes,
Yeah.
which is why this build to rent craze is on fire.
That's incredible.
So that craze could
Yeah.
keep these homes in a very favorable valuation.
Last vacancy I had on a rental, I had 70 applicants in 4 days. 70 applicants.
That's incredible.
For one property.
Yeah.
A three bedroom, one bath in Cleveland.
How did you even
70
screen them?
applicants.
Like, how did you
Well, you don't
screen-
screen all of them,
Okay.
right? So, and we can get into that in
Yeah,
another
that's
show.
from the management
But-
side, that sounds like how many,
Yeah.
did you have to answer those phone calls or emails? Or?
Well, my wife handles a lot of that, and
Okay.
so we have a system. But you go through, you filter, you have a filtering system. We can talk about that in terms of how to manage properties and how to manage applicants and screen and background checks and all that. And then the people that we've talked to and we like, we bring them in for a showing if they're interested. They do an application, they pay an application fee, and you'd be really shocked at how desperate some of these people are to get properties. We actually had multiple people that we showed the house to that they, were asked, I don't want to say begging, but, they were asking, how can I get this property? Because I looked at 4 houses in the last week, and unfortunately I got turned down for all of them.
Incredible.
Or someone else was already given the property. And so it's pretty incredible. And some of these people, they're not necessarily looking for, the high-end, type furnishings and fixtures in a property. They just want a place to live with a landlord that treats them the right way. Because a lot of people I'm finding as a landlord right now, their current landlords just aren't treating them that well.
Right.
And so we can have a whole nother conversation about how to treat your residents. We don't call them tenants, we call them residents.
Okay.
There's a difference psychologically
Absolutely.
when you're having a conversation with them about that. And you'd be amazed at the increase in rents. I'm from Cleveland again, but this is what I'm hearing talking to investors all across the country. And obviously that's what Dustin's talking about here, is because of the inventory of not just housing, but the inventory specifically of rental properties.
I feel like we can talk another hour just about this topic, but we'll do other episodes. Dustin, we like to end every episode with our famous segment. It's called This Day in Real Estate Investing History, and it's brought to you by Equity Trust. So unleash your inner real estate mogul. Discover your potential as an investor by maximizing the power and possibilities of buying and selling real estate with your retirement account. U.S. News calls them the top 7 IRA accounts for 2022. Investopedia says best overall self-directed IRA company with $34 billion in assets under custody. Start the conversation today at trustetc.com. And with that, Dustin, I thought this was great. So this is from the Morning Daily True Democrat, which is out of Cleveland. This is from November the 15th, 1852. So this is literally a newspaper.
Cleveland, Ohio?
Cleveland, Ohio, right? And I'm going to scroll down here. You see these legal notices,
Yeah.
right? And you talk about real estate investing, which I think is fantastic because that's what we're doing a whole show about. Let me zoom in.
So this is what you had to do before Zillow.
This is what you had to do before Zillow. How would you know? So you'd see the legal notices, right? Right smack in the paper. And you're going to come right here and it says this chancery sale. And it goes right into this sentence, kind of right in the middle here. But anyways, this is essentially a tax deed sale. And it references said property appraised at $425. And it's to be sold, and it gives the suit of the folks that didn't pay their bills, and I'm sure we're way beyond the statute of limitations there, but it's in Cuyahoga County. And I think it was, they give you the date and time. The point of this article, one is from 1852, and I think that's really
very
cool,
cool,
is that today we're still doing the same thing. There's folks that don't pay their taxes. You have the ability to get in there, get a tax certificate, make 8% or something on that. In the event that they don't pay it for 3 years, boom, it goes up for auction. You can get in, use Dustin's formula, and be able to sell this bad boy and make some money. And maybe you do it all in your IRA and avoid
Right.
the taxes, right? So, Dustin, David, Florida property appraiser, thank you so much for joining us on
Thanks for
Building
having
Equity.
me.
John, as always, I look forward to talking to you on the next one.
Thank you, James.